Good morning, everybody. Well, yesterday got a little out of hand. Was went down more than I thought it would in the day, getting down to the low of Friday. I figured it was going to come down at some point, but it was one of those scenarios, especially the way it started on the way up in the morning. You can see on the 15-minute chart coming out of the blocks like that. Yeah, I was doing good for a while, remembering the charts, but there we go. So that's what I was talking about. It come out of the blocks yesterday like gangbusters out of this consolidation, like it was ready to, tear through the 20 MA there. And then all of a sudden, the selling started and it didn't bounce from the gap fill. And then it got worse. So it was definitely one of those situations. It went down because it didn't go up. And then as it entered this void, it just continued lower. And I really was surprised that it didn't fill this gap. You could say, well, the market closed, but nonetheless, it could have just went down faster and it didn't. So it was a little observation of some kind of buying strength during this continuous decline there, or even where it tried to bounce and a little bit and failed and a little bit and failed and so on. And so even this morning, this little pop off of this little retest here, which had some momentum behind it, just got sold pretty aggressively, which isn't surprising. So we have our typical wide range bar down day, which is typically followed by a narrow range day. Sometimes we do get, multiple bars going down, and the options are priced for that today. So it's possible, but will it go down as far as where they're priced for on SPX? Yeah, so it's a big line, 3,800, but so we got this gap fill here, and this area right there you can see on SPY. So I always look at this to see where it's at to match it up on SPX, because SPX doesn't show the pre-market and the gap. So this gives us a good guideline. So I think, look, it isn't going to take much for it to hit this support here and fill this gap. So that's definitely a real possibility. It's not that far to get there where traders would be willing, especially after a move like yesterday, to look for a bounce. Ideally, it just drops right at the open, right into there, because you get like an extended move down and then the bounce up. And so McGraw's telling me there's a big line in the sand at 3,800, so that must be based on a big open interest in options that are expiring at some point. Yeah, that's usually so. It's a really good piece of information if you're not using it, to look at, even if on SPX, especially since institutions are trading it. But look, if you're trading Tesla or any of these stocks that are very volatile and move a lot, besides just looking to the left, it's really the only thing. I mean, look, when I say look to the left, and that's the only real thing to look at, it is as far as price. So when we look at moving averages, they're subjective and we see if they're lined up. But we have, moving averages on a daily chart on an index that are widely followed by institutions. So they come into play. Now, open interest, at a certain strike, like McGraw's telling me 3,800 on SPX, there must be a big open interest there. And because market makers are hedged based on those big open interest levels, they tend, on the way down, tend to act as support. Now, if they don't bounce from there, well, they tend to act like a catalyst to drive prices lower. So, there are price patterns that form at these levels that give us a heads up as to what's likely to happen. But again, based on pricing the gap, we've got some good information here between this 380 and the support level here. Now, this support level, and some of the things that we discuss as far as master trader technical strategies in the course is, as far as reading what's to the left. Well, one of the concepts is neutralizing areas to the left. And what that is based on is many years of observation on my part, just looking at how the hell prices move beyond certain levels that you think are very significant as support. And so you got to come up with a rule that gives you some consistency in your analysis. And the rule is if prices traded below that level and back above, it neutralizes it. So when I look at this level and I look at this pivot, I still have this area of what should be support, but if it gets through here, all of this, so this is just how I view things and my bias, right? Is that this is what really matters is these bars right here, because prices traded through this area and below. And actually it's neutralized. I don't care about it. It's been used up as a reference point of support and resistance. So these bars, there's nothing there. So if this doesn't hold, the likely stopping point is going to be down here. So I think today, this is going to be a very major area that sellers won't be able to push prices down below. And so, I guess that's, well, the bottom of this bar must be this. So let's just call it here. Right? Let's just call it right there. That if the market's going to go down today, it should hold this area. Okay. All right. So now that we got that out of the way, let's just look at the futures. And we see they're just slopping around here. They couldn't bounce overnight, but they broke down and they popped up, and essentially we've got a big mess going on here. And we see where things are at. So now we go to SPX, and we know the markets are trading around here. And we look at the same thing. Here's the gap fill. Let's just drag this one down here. Here's the gap fill, right around 3,800, and the bottom of this pivot here, give or take. And we're not into exact points. We know that they're flexible, but we can see 37.42-ish, right, give or take. And then if you go and look at the option table, and some of that juice evaporated a little bit from a few minutes ago, but anyway, 37.35 is 80 by 95, 37.40, 95 by $1.10. So 37.40 is the bottom of this area, which could it get down there today? Sure. But is it likely to keep going? I don't think so. All right. 39. What am I? 39. Oh, up above 39.35. Absolutely. Absolutely. And it would take like a miracle. It's like, okay, you just threw your worst enemy off a 15-story building and expect him to get up and he's going to run up the steps to the top. It ain't going to happen. So that I look as being a no-brainer. This one here, I wouldn't call it a no-brainer, but if the market should drop at the open anywhere into here and the premiums pop down here, I think that'll be as close to a no-brainer as you're going to get today, even for considering an iron condor. So there you go on SPX. Now we look at other markets. Are they showing any relative strength, any relative weakness compared to the one we were just looking at? And essentially nothing's happening here. We had this pop up and it pulled back, and traders are just waiting here for the next shoe to drop, maybe, or some news event or whatever, right? Maybe they're just waiting for MT Live to be over after, 1 o'clock, and then we can get back to business. A little levity there, but usually when the market is, we have these things where it actually does move at 12 o'clock, between 12 and 1 a lot of times. So we'll see if that happens. But, right now, I think institutions are a little stunned after yesterday's decline and waiting to see what might happen here. So even if we take this and say, what's the potential upside here today? Well, it's a wide range bar, factory work. Maybe halfway into that bar if it could clear these highs. But to come all the way back up there, that would be wild. To have a big green bar, it's stalled, come all the way back down to the bottom of the green bar and then go right back up again. That would really be schizophrenic. So, we can't think from the point of view of, well, what if crazy happens? We just have to manage in between. All right. So the Dow pretty much doing the same thing, maybe a little bit of relative strength in the moment here, coming back up off of that low. It's just traders just bopping this thing back and forth for now, but it could have some potential if it could clear these highs here to move up. But look at the weekly charts, reversal. It's only the beginning of the Wednesday, but let's see how deep that's how deep it gets at the end of the week into that green bar. As mentioned yesterday, these green bars haven't gone very far. Stephen, I've been saying this market's schizo for about almost 2 years now. Yeah. All right, Russell, same story there. So keep an eye on oil stocks, which held up. They gave it up yesterday as well, but keeping an eye on like XOP, KBE, XBI, how those ETFs are doing. There's a lot of stocks, regional banks and biotechs and so on that influence this. And so this was holding up better. And then the oil stocks started giving it up and so on. So keep an eye on that. Bitcoin back down near 20,000. If this isn't a retest and reversal here, I think the market is going to get shellacked. I'm surprised at how small the bars are. I think these Bitcoin traders or institutions are just on their knees, just, praying at this point. And I think the proverbial shit could hit the fan if this starts picking up some momentum below 20,000. Spread, well, spreads on Qs and IWM. I mean, just based on what we discussed about SPX, just see if the level's there, if there's any juice. Most of the time there isn't. But I mean, if there's juice for Friday, just, based on the patterns, yeah. And if you can go out to next week and get far enough away, I think that could make sense as well. For example, if you said to me, Greg, do you think the Qs will get back above 296 or whatever, by next Wednesday? Well, I would say no. Is there premium up here at 300? I kind of doubt it, but if there was, I mean, that's what I would tell you. And do I think it'll go down below this low by next Wednesday? I would doubt that as well. But you got the whole weekend and, the holiday and all that. And usually holidays tend to be a little bullish on the price action. We'll see if this can turn around. But that's what I would look at. All right. Crude oil moving up. We talked about this early in the week. Whatever this market's doing, if this starts pushing up, and the interest rates had the buy set up there, I said, look out for that. Whatever Friday was, it just might be a weird kind of day that occurred there, and it turned out to be. It has asked me 3805 level of 3. The chart has been neutralized. I don't want to spend too much time here, but let me just take a look. There's 3805 level from 623. Look, it's similar to what I said, right? Over there. This has overnight trading. So this is more of just a trending move. But you've got all these pivots here, which like where's it going to stop? So the way I look at something like this is, where would I want to buy it? If this started to collapse below 3,800, well, it wouldn't be here. I'm going to look for the most significant point, which is going to be down here around 37.40. Now, maybe it could go down here, but I've got 3 pivots here. So everything we do here at Master Trader is based on common sense. Right? There's no mystery behind it. It's just, what is the strongest looking area of support on that chart, on that 60-minute chart? Oh, there's 3 pivots here where it hit that low, it hit it again, it made a higher low, and it rallied. So yes, this part over here is like neutralized, especially this, for sure. But, this here traded above kind of that area below. So you would definitely be looking at this as your area of support. And what would be the safest? Like, where would the majority of institutions or anybody trading this want to buy? Down here. So that, and you can see where the crosshair is. It's right down there. Okay. Yeah. Okay. Let's continue. Silver doing nothing. Just a mess as usual. Gold doing nothing. Interest rates we looked at. VIX didn't move a whole heck of a lot, but it's got room to go up. But, this it pulled back. And this way, there were a bunch of things that just kind of made Friday look like some kind of sucker play there, And one of the other things was, you had Microsoft and the leaders had ripped to the upside already. And it's like, how much further were they going to go? Anyway, but look, we look at things and come to, let's just call it an educated bias, or, guess as to what's going to happen. And then we just look at the price patterns to see what actually evolves. All right. So we'll see where today goes. Play it wide, and we'll see if it breaks that support level. And if it does, as you can see, it's got room to drop. And if it can get above here, right, while it's possible it could go up there, I would think it's less likely. There's nothing to stop it. So you're in a situation where traders are going to have to create resistance and possibly support if they can't get down there. Where's Dan?
I mean, you're done. All right. Yeah, the market's reversed. They're around 8:30. I saw them clawing their way back, and I was wondering why. And I've heard CNBC saying, "Oh, well, there was some news in Germany about their economy, whatever." But who cares? We were talking into the close of whether we were going to get a gap up or gap down, and I said that's an ugly reversal, probably gap down or just little inside day. And that's what I prefer, a little inside day, obviously, to continue with our bearish bias here. So the opens are fine. We have a couple put spreads on airlines. Well, everything came in a little bit. Let's see what I have over here. And now this would have been a fantastic short yesterday had I seen it. Sell set up at the 20, rounding top, downtrend. I don't know what's making that, but now it's gapping down too much, $5. But look, bearish weekly. Look at this thing, $400. I don't even know what they do, but that's a beautiful short sell setup right there. That belongs in our MT Live. lesson. Here's a double top and a downtrend. Green bar ignored. That was a no-brainer short right there. All right, so Fur gave me a bunch of these to look at, and they're all sell setups. So Fur, let's go through them right here, because I'm going to tell you which ones I like the best. So this is a sell setup, topping tail, without a doubt, at the 20, but there's no significant continuation, kind of shock pattern or resistance to the left. So that one I don't like as much, and that had a bullish reversal on the weekly. So that actually could retrace and set up a double bottom to buy. But short term, yeah, it's a sell setup. Let's see, this one's better to me. This is a tighter turn at the 20 and minor resistance with a bearish 15-minute chart. So ICE I like, and obviously any directional is a candidate for credit spread. That's today's subject in MT Live. Selling credit spreads, we put on 3 bearish ones with similar patterns yesterday: Square, Dollar Tree, and McDonald's. McDonald's was stronger, but reversal top of the range. BBBY, it's just down too much for me, Thomas. It does look horrible at this poor thing unless they get bought out. I mean, it's a nice store. We don't trade fundamentals though, but that chart is saying they're not doing something right fundamentally. Looks horrible. But gapping down $1 on a $6.50 stock's a big percent. Back to Fur's list. Now this one, see, it's deeper into the prior bar, so this one's better than Kim, even though I'd prefer there to be resistance to the left. Same, same, but I'm pointing out the ones I like the most. This could also pull in and set up a double bottom. This one's better because, say, we like the ones that have a shock pattern, a shock reverse, more of a potent reversal. And this one went up, and now it's a range expansion closing under these prior bars. So that one is superior. So I like, what did I say? ICE and CVS. I'm putting CVS in a window. That looks fantastic. If the market's not bouncing, 5-minute low on that looks good. CNP, same. It looks lower, but you get the flavor of what I'm talking about. All right, CMCSA. This is a bear flag. Here's my flag pole. Here's my counter trend 30-degree thing, and I got a shock reversal here. So that one I like. So you've got some great ideas here this morning, Fur. Good job. And Ballard, yeah, has a bearish close, sell setup, 3 topping tails, this little gap resistance. That one looks good. Hey, Fur, I think I'm just gonna give you my login and let you moderate the rest of the day. I'm gonna go to the beach. With a sea of red everywhere in the sectors. Energy is still holding here, gapping up to yesterday's high. So I posted that Citra is in the sector. So 5-minute high, Citra. We're already in WMB. It's been lagging, but it's gapping up. Our stop is yesterday's low. NFE, it's a 30-minute high watch in a downtrend, but gapping maybe over here. Let's come back to that. TWOW, it's not earnings, but gapping up to $11 here. I put that in a window. Let's see what it does. This middle window right there. Skyworks got a downgrade. And see here's I like this one Fur, since you're Mr. Sell setup today. Look, this is a 2-bar reversal, or actually 3 if you want. at declining 20 at resistance. The problem is it's gapping down too much. But had it not been gapping down at all, I would say short yesterday's low. Looks great. But the gap down's messing it up. A Teradyne, there you go. Their sell setup, reversal of minor resistance, declining 20. I mean, these sell setups are all over the place. Just like the other day where I said climos are all over the place in oil, and we were getting 1, 2, 3s all over the place in cruise ships, airlines, and banks. So now we're getting sell setups in many different sectors. So Teradyne looks fantastic. McGraw, that's also the McGraw, all these sell setups that I'm saying I like. Obviously, let's check call spreads. Talking about cruise ships, Norwegian Cruise Line ran into an iceberg in Alaska cruise. You know, that's, you know, after Titanic, and then you would think it's impossible to ever have a catastrophic accident. And then the Concordia friggin' sunk over there in Italy. And now we got this guy hitting things like, you know, you just shake your head. Oh, but then Morgan came out. Morgan came out and said that if you have a demand crunch, which means for, you know, another recession, whatever, then they said Carnival could go to zero. But we knew that. We knew that during Corona. I was saying, look, technically this thing's oversold, blah, 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 but they could get wiped out. You know, they still, it's revenue minus expenses equal income, but they got bailed out by a lot of the, I think it was Saudi money bailed them out. But I don't know. ENVX, we are short this from yesterday. This was a beautiful short. You know, this topping tail made it, McGraw, more better. And then we had a closing breakdown. We shorted under that bar. That was beautiful. So let me set a new alarm now. I'll set it at, I'll just set it at 980, up alarm. Low alarm 925. That's great. And so, yeah, I'll need some help watching that hit list that I told you I liked. Pins gapping up on news that the CEO's leaving. So gapping up on, I mean, a CEO leaving could be bad or good news. So it totally depends why he's leaving. We let the market dictate whether it's bad or good news. In this case, the market is saying it's good news. So let's watch that 30-minute high. AVAV, that's a bearish pattern, but gap messed it up. MHC, another sell setup at resistance, but oh, this was, oh, no, McKesson, this had earnings, but yeah, McGraw, sell setup, call spread idea. Square, low alarm, we're already in it. Yep, market accelerating here. So this just to me feels like a continuation of the weakness from yesterday. Setting new alarms here on Square. Yeah, in the video we said yesterday was a call spread idea. I forget if it was a directional or not, but I mentioned Teradyne a few minutes ago. Check out Teradyne. The McKesson 89 calls, there's no weekly, so you would have to do 90s, 10 cents by 30, no interest whatsoever.